All right, good evening, everybody. It is August 19th, 2022. I believe it's about 8:40 p.m. Eastern Time. Happy Friday, everybody. Hopefully you had a fantastic week, finished off the week strong. Hopefully you guys closed some deals, guys and girls closed some deals, had a lot of success this week, but now is the time to kick back, relax, and enjoy the weekend. So I hope all of you have beautiful plans for the weekend, but before we kick off the weekend, we do have to talk about a couple things. So on tonight's stream, we are going to be talking about Home Depot's earnings report. So Home Depot reported earnings a couple days ago. I wanted to do a deep dive in the report, talk about the good, the bad, and the ugly. Another thing I wanted to talk about is this trend we're seeing among companies of layoffs. So I believe Wayfair, and this was across the breaking news today, it's CNN Business, Wayfair, under the ticker symbol W, is cutting about 5% of its global workforce, which equates to about 900 jobs. So we'll talk about that. We'll talk about what the CEO said as the reason for cutting those jobs. And then we're going to end the night talking about a nearly $1 billion settlement that a lot of the investment banks have to pay regulators for the improper use of WhatsApp and Signal and all of these different messaging platforms, if you will. And we'll talk about why traders and investment bankers are not allowed to talk about proprietary client information or trading activity over these applications. I believe if we talk about the traditional telecom space like a Verizon and AT&T or T-Mobile, I believe they have proprietary products that they are actively trying to sell into these investment banks. I know during my time selling those particular products, we tried to sort of break into those investment banks, selling those particular messaging apps with little success, but we'll talk about it. I think it's important. But for now, everybody, let me put away my computer and we will say hello to everybody in the chat. I see Brian, good to see you. Brian, welcome. Sally is here, says, hey Tom, happy Friday, good to see you. Tone, Rick, welcome. British Gray from Tampa, Florida. We have Otto. Mike C says, happy Friday, everybody. Sam Pod says, hello, Tom. Andreas, welcome. ABD says, hey, Tom, how's it going? It's going good. Lee is here. British Gray, Gene, Paul Greenwell. What's up, Paul? Mets fan 1023. Good to see you. Lennox. Dallas is here. Bidzita Lopez. Vinny Castellano. Hello, hello, hello. So I will put my laptop away and we will get started on the stream. So I just want to warn everybody, it's going to be a little bit of a short stream tonight, probably only about an hour and a half. I do have to get an earlier bus. I need to be back home to get some work done. You know, I've noticed ever since the summer months have really been kicking up here in Miami, it's very hard to get any yard work done during the day. It's pretty much just like a death sentence if you need to get any sort of yard work like mowing the lawn, pulling weeds. Highly advised not doing that during the day. It's actually quite nice to do it at night, so I may spend my evening doing some much needed yard work. But for now, everybody, we are outside of the Metro Mover station right here at the bottom of the 200 Southeast Financial Center in Miami. It is a beautiful night, a little bit humid, but not too bad now that the sun is down. Gregory is here, says hello all, good evening. What's up, Gregory? Paul Tricky is here. Lewis is waiting for you in New York, or Joseph says waiting for you in New York. Good to see you, Joseph, welcome. Deborah says good evening, everybody. So check out the building here. This is one of my personal favorite buildings that make up the very iconic downtown Miami skyline. So I was actually going to start off the stream inside the WeWork, but there was actually quite a few people in there. The offices were packed. People here, a lot of construction going on as well. I believe the Citadel Securities construction crew is in there doing all of their construction. Destructionist is here, welcome. Mike C says, mosquitoes love night gardening. Yeah, I'm gonna have to make sure I suit up on the bug spray. Sandra is here, says, hello Tom, nice to be with you. Good to see you, Sandra. Welcome, welcome. So I noticed something interesting out of the Home Depot's earnings call. And if you guys want to follow along, I posted the transcript in the Nightbot, so if you type !HD, so !HD in the chat, the Nightbot will drop the link to the Home Depot's earnings conference call transcript. So a lot of the times what I'll do, and if you guys are interested in a particular company, or even if you're just doing some research on your own, if you just go to the investor relations page of any of these particular companies, not only will they give you the link to the actual earnings conference call, so you could listen to it in your spare time, maybe as you're commuting home from work or something like that. But if you're more of a reader, which I tend to be a little bit more of a reader, they actually post the documentation of the transcript. So somebody is transcribing it, types it up, and then you could print it out and sort of make your highlights and things like that. Now, for all of my viewers, I do tend to get a lot of emails from people that are either just graduating college or want to break into finance or investment banking. So they're asking me for advice and ideas and things like that. Now, I'm not in finance. I don't work in investment banking. I wanted to. I went the route of enterprise tech sales, working at a major tech company. But the vast majority of my friends are working on Wall Street, either in mergers and acquisition or M&A, or in sales and trading. And if you're looking to, wow, check out Miami Tower tonight. Beautiful, bright, it's like a bluish type of purple. Looks really nice. Anyway, I'll just tell you guys where we're going. We are going to see the Miami Bowl. I haven't seen it in a while, so I want to take a little walk over there and see it. But one of the things that I would say, if you're interviewing with any investment banks, if you want to be an analyst or something like that, here's a tip that I'll give you. And that I think it'll work really well. If you go to any of these companies that's publicly traded, go to the investor relations page and just read through a bunch of these transcripts, right? And the reason why I say that is because at the bottom or the end of the earnings conference call, they start to take Q&A or question and answer from analysts at many of the major investment banks. So for example, if you type !HD, which is the ticker symbol for Home Depot, if you type that in the chat, the Nightbot will drop the link. And one of the things you'll notice is if you scroll all the way down to the transcript, it'll have analysts from Jefferies, Barclays, Goldman Sachs, UBS, and these senior analysts are actually asking the C-suite or the C-level executives at Home Depot particular questions about the business, right? So if you want to be a particular analyst at those particular companies, it's very good to get accustomed or acclimated to the type of questions that they're asking these C-level executives, right? So let's say, for example, you want to work as an analyst. Well, during the interview process, if you are very brushed up and polished on the particular questions these analysts are asking the C-suite, well, that's going to really show that you did your homework and impress, maybe you're doing like, I don't know what they call them, the super days or whatever. I think you're going to be one step ahead of everybody else, and it's a free way to sort of get accustomed to the business. So I would definitely check that out. So one of the things that I want to really do a deep dive into today in terms of Home Depot was the very, very impressive online sales. So over the course of the past couple streams, we've been talking about a lot of big box retailers that have stood the test of time and many of them that did not stand the test of time. And I think the biggest takeaway are big box retailers that have managed to stand the test of time, really figured out the e-commerce piece of the business. So we'll talk about that. Hey, Best Bets TV says happy Friday, bro. Good to see you, Best Bets TV. Welcome. Mike C, welcome. 48 says good evening, Tom. Hope you're well. Welcome, 48. 48 is joining us from New Zealand. NMB045 says hey from California. NMB045, since when are you in California, man? That's awesome. I guess you're doing some traveling for work or something like that. Gene is here. Lila is here. Tech Sports says hello, Tom, and welcome to Miami. Thank you. I appreciate it. It's definitely good to be back. Very rarely do we walk this way, but I think we need to make I'm not too familiar. I think we need to make a right in order to get to the Miami Bowl. So actually we will do that now. Hey, Anonymous says, I thought Tom would be at South Beach partying it up tonight. Yeah, unfortunately no, but tomorrow, I actually may be in South Beach. Well, a combination of the two. Usually on the weekends when I'm in Florida, or I would say Southern Florida, what I usually like to do is go to this particular neighborhood called North Beach. Now, the reason why I really like North Beach, so if you guys are thinking about visiting Miami and you want to visit some beaches that are not going to be too touristy and too crazy, I would definitely recommend the Normandy Shores neighborhood in Miami, and then just cross over. You could either ride a bike or the free trolley. It'll take you right to North Beach. I think it's like 72nd Street, stretches all the way up to about 80th Street. Really nice. Very, very quiet community. Hey, Anwar says, hello, I am Anwar from Morocco. Well, welcome to all of our Moroccan viewers. Hopefully you're well. NG says, hello, Tom and chat. Taxicab says, Walmart is teaming up with Paramount Plus to take on Amazon Prime Video. Yeah, I saw that. So the CEO of Walmart said they sent out a survey, I think via the Walmart subscription service of the mobile app, and they specifically asked all of their customers what they would want to see. I think we have to take a little bit of a detour here. Let's see. So quickly, not to get off topic, but all of this construction here, I think if you look it up on Next Miami, what they're going to do is make all of the sidewalks street level. So instead of having a curb, you'll actually just, I guess if we walk down here a little bit, you'll be able to see it. They're going to make all the sidewalks street level. So I think that's what they're doing now. And if you look all the way over here, this is the Paramount building, or the Paramount Tower, where we will go tonight. But yeah, it seems like the streaming, what do you think the best way to get around all this mess is? Maybe if we go this way, I think maybe it'd be a little bit better. Yeah, maybe if we go this way and around. But it seems like a lot of those streaming services are so ridiculously crowded in terms of the business model. So you have Amazon, you have Netflix, you have Apple's proprietary one. It seems like a lot of that business is extremely, extremely crowded. And also, I think if you have AT&T or Verizon or even T-Mobile, I think with some select mobile plans, they actually give you free access to these streaming services. Yeah, so this is finished and it actually looks pretty nice. So everything is going to be flush with the sidewalks. So there's going to be no more curbs, which is actually kind of nice. Jones says new construction. Yeah, it looks to be that way. Good to see you, Joan. Martin says Hawaii beat New York. Oh, is it that baseball, the thing that's going on? Oh, Mike C says AT&T gives us HBO Max. So yeah, you're right. So AT&T does give HBO Max. Isn't that new? What is that show? The very popular show Game of Thrones. I think there's a new episode or new season coming out or something like that. Everybody's freaking out about. A little bit of bad news though today, everybody. Breaking news: Wayfair. So the online, I guess you can call it like an e-commerce business for selling furniture. I actually bought all of my furniture for my place off of Wayfair, but they announced that they're cutting 5% of their global workforce. That's about 900 jobs, so that's pretty significant. You never want to see somebody lose a job, so that's 900 jobs. But the company said the cuts will help, quote unquote, manage expenses and realign investment priorities. And I was listening to the interview, and essentially here is sort of their argument for laying everybody off. And I think we pretty much predicted this to a T on the streams. What happens is I think they get a little bit ahead of themselves. And what I mean by that is you saw all of this demand from people buying apartments, people buying homes after the pandemic. And so you had a massive pull forward in demand. So if you look at, I would say maybe the previous 6 or 7 earnings reports for Wayfair, they were consistently blowing out their sales and revenue estimates. But the problem with that is it's not sustainable, right? And we actually see a trajectory, because we were talking about this on last night's stream, of existing home sales tapering off. And if existing home sales are tapering off, well, that means there's going to be a lot less people that are going to be buying furniture to furnish those homes that are not being sold, right? So I think what happened is Wayfair probably just got a little bit overzealous. They hired way too many people because at the time they needed to hire all those people to keep up with the demand. But now that demand is tapering off, obviously they have to lay people off. So I wouldn't necessarily view this as an Armageddon type situation as a lot of the media outlets were portraying this to be. I think it's just basic supply and demand. If you have literally 3 years of home buying demand and furniture demand packed into 24 months, or even less, 12 months, well, you're going to need to hire people like crazy to keep up with that demand. But as demand reverts back to some sort of a mean or a normalcy, well, then you don't need all those excess of employees. And I think the reason why I claim that I don't think it's an Armageddon situation because Home Depot's earnings was actually pretty good, like really good. But we'll go into that in a minute. Hey, Austin City Limits is here. Good to see you. Sunshine after rain. Welcome. Hey, 61 says, by the way, hello everybody and happy Friday to all. Yes, happy Friday. Hopefully you guys have some interesting things planned for the week. So I think this Metro Mover right here, it actually travels through these apartment buildings. So all these are luxury apartment buildings right here. The Metro Mover actually goes in between the buildings. I wonder if the noise is ridiculous because you have the Metro Mover going right in between the buildings and these people all live under the tracks. I wonder if they have any ridiculous noise complaints at night or anything like that. I guess we'll see. DJC, what's up? Says everybody was fixing up houses to flip. Not sure it's an indicator of health as much as an institutionally controlled rental and housing market. That's actually a pretty good observation. That's a pretty good observation. So this is actually a piece of the Berlin Wall, which is an incredible piece of history. But Home Depot reported a good quarter. Earnings per share came in at about $5.05. Many analysts on Wall Street were expecting $4.94 of EPS. They also beat on the top line in terms of their revenue, coming in at $43.79 billion versus the $43.36 billion that was expected. Now, if you remember when we covered this the last time, when we covered Home Depot's earnings reports last quarter, the number one thing that I really wanted to focus in on was the average ticket size. Because if we focus in on the comp average ticket size, we'll get to understand one of two things. Are consumers spending more because they are able to acquire more products and services? And if that is the case, if consumers are spending more because they're buying more products and services, well, that probably means the economy is rather healthy. In another scenario, wow, check out this apartment building. That looks like it's almost just completed now. If average ticket size was up, however, if the CEO or the CFO comes on the earnings call and makes a particular statement saying the reason why our average ticket size was up was due to inflation, well, That means people aren't spending more because they want to spend more. That means people are spending more because they have to spend more because things are more expensive. So I guess we'll find out our answer now. So average ticket sales at Home Depot increased 9%, while comp transactions actually decreased 3.1%. The growth in our comp ticket was driven primarily due to inflation across all of our product categories. So there you have it. So the CEO came on the earnings call and says, even though our average ticket size, so let's say you walk into Home Depot and the average consumer tends to spend $50, right? And now this quarter, the average consumer spent about $60. The reason why they're spending that money is not because they're actually acquiring new products and services, buying more things. The vast majority of that has to do with the existing things you're buying just costing a lot more, which is unfortunate. But this is the campus of Miami-Dade College, and I love how they have the stock ticker tape going across. Hey, War Walker, this is Tom. I was just walking by there earlier today. Awesome, dude. Gene says NBC announced Best Buy layoffs across the country tonight due to lowering sales forecasts as well. Yeah, it seems like that is an increasing trend. It seems like a lot of the pull forward in hiring, because there was a massive rush of demand because everybody was, home with their stimulus checks, spending money. But good observation. Line Sync is here. Good to see you. All right, so we are coming up on the Miami Bowl. We haven't been here in a while on the streams. Hey, Aston Greenfell says hello from the UK. Good to see you. So this bull was unveiled at the 2022 Bitcoin conference at the Miami Convention Center. And now it lays to rest here, right on the campus of Miami-Dade College. This thing looks pretty cool, by the way. FredX says that's a nice bull. Thank you, FredX. Appreciate it. Yeah, it has a beautiful glow in its eyes, too. Yeah, Line Sync says it has the evil eyes. Oh, I think they changed colors, too. So I don't know. I think this may be a little bit bigger than the one in New York. And I'm not sure which one I like better. I think just because it is... I think I like the original Wall Street Bull a little bit better, but this one is kind of cool as well. Yeah, Lila's like, it looks like a demon from Ghostbusters, I know. So another big piece of data that I like to look for on Home Depot's Lowe's earnings report is big ticket transactions. So anything that's a big ticket transaction is anything over $1,000. That was actually up 11.6% year over year. And Home Depot really said that was driven by strong demand for their, I guess you can call them institutional buyers, so big contractors and things like that. And in the pipeline, supposedly, they claim that there's a very, very big backlog of professional products, right? Because you are professional projects, I should say. So there's two distinct categories. One is the professionals, and then the other one is the do-it-yourself. So DIY. And the good news is, as we talk about the housing market, I'll give you guys one more loop around on the bull and then we'll head down to Brickell. As we talk about the housing market, if we see that contractors still have a big backlog of demand for remodeling, let's say if you're going to remodel a kitchen or you're going to remodel a bathroom, that tends to signal that consumers are still pretty healthy, especially if you've bought a house or recently bought a house. And I think what we were talking about yesterday on the stream, even though that existing home sales were down about 6% year over year, we're still seeing the prices of single family homes actually appreciate. So usually if you see sales declining, you usually see prices declining right with it. But as inventory still remains at record lows, I think we have about 3.3 months of supply on the market. It would appear to be that the average person that's buying a home is probably well capitalized to be able to pay for those prices. So I guess that's good news. Hey, Black Beauty Machines is Stan's Eyes. Good to see you. Hey, Bottomless Coffee says, did Tony Stark recreate the Wall Street Bull? He very well may have. Very well may have. So Occidental Petroleum is going across the screen here. And I think Berkshire Hathaway acquired a massive, massive position in Occidental Petroleum. I think about a 15% position, which is nuts. Hey, Willie, good to see you. Says it looks robotic. I think that's what they were going for, like a robotic mechanical bull. They unveiled it at the Bitcoin conference. So I think it has to play into that. Steve says, looks dead tonight. Yeah, so this is the college campus. So we're on a college campus. This is the campus of Miami-Dade College. So probably there's no classes or no kids in session tonight. I just wanted to take a quick walk over to the mechanical bull, or the mighty bull of Miami. But we are going to head back towards where we usually stream, the Brickell area. Mike C says, I thought Berkshire already had a big stake in Occidental. I think they already upped it. I think they upped it today, which is crazy. So I think he bought it. I think they bought even more. Now, I don't know. I don't really want to say I disagree with Warren Buffett for obvious reasons. I mean, he's one of the greatest investors of all time. But it seems like piling into an oil company, where when it appears that crude prices are topping may not be a good idea. But then again, I'm not Warren Buffett. He probably knows better than me. So does he know something we don't know? Does he think that inflation is going to persist? Does he think that crude oil is going to find a bottom and move higher, which would then bring gasoline prices higher? Because if we fall further, because if you remember correctly, back in March, I believe crude oil, ticker symbol CL, hit a high of about 130. Now we're trading right around 90. If we fall further to 70, that's going to bring all of the energy sector down with it. So I don't know. I guess we'll have to find out. Exchange should get a bull as well. Cindy Foley is here. Says, hey Tom, good to see you. Cindy, welcome. Just the guy says, Tom, Warren Buffett's Berkshire Hathaway on Friday received regulatory approval to purchase up to 50%. You're 15? So even more. Crazy. 50%. That's nuts. Yeah, I don't know. I mean, I definitely don't want to bet against Warren Buffett. But it just seems a little strange that why he would do that. But then again, he's where he is and I'm where I am. Hey, Chris Beeman is here. This is great Friday evening, Tom. What's up, Chris? Good to see you. Hope you're well. So I don't think this is where the Waldorf Astoria building is going to be. I think this is the sales gallery. So if you're looking, if you're in the market for a multi-million-dollar apartment, I think this is the sales office. So the Waldorf Astoria is supposedly going to be one of the largest or tallest residential apartment buildings south of the World Trade Center. But I'm not sure where the actual construction site is going to be. I think this may just be the sales office. Hey, Nako says, how long are you streaming tonight, Tom? We should be streaming for about an hour and a half. I may have to cut it short tonight because I have to do some yard work. And here in Southern Florida, especially in the summer, you definitely don't want to be doing yard work during the day. Ridiculously hot. But if you look straight ahead, you will see the FTX Arena where the Miami Heat play. 61 says, I just hope Bitcoin bounces back because I've lost some money. Yeah, I think the market in general was down pretty big today, but if you pull up a chart, I use TradingView.com. TradingView is a free platform, free trading software where you can pull up charts and things like that. Pull up like the SPX, the S&P 500, all the major indices. They're pulling back right at their 200-day moving average. So usually you'll fall into some resistance there, a lot of overhead supply, a lot of selling. But I think Ethereum and Bitcoin were down 10 to 15% respectively today. So definitely taking a big hit there. Hey, Gabrielle says, hey Tom, Miami's looking gorgeous tonight. Good to see you. So we are standing right outside Bayfront Marketplace. We may take a little bit of a walk around there, but I'll show you guys the skyline of downtown. On the left-hand side of the screen, you can see the Paramount Building. Then you can see the Freedom Tower. Hey, Elizabeth is here, says, hey Tom, hope all's well. Welcome, Elizabeth, good to see you. DJC says, in Southern Florida, yard work is cocaine. All right. Steve says, I'm definitely in the market for a multi-million-dollar apartment. Just need multi-millions of dollars, I know. Yeah, it seems like a lot, I'm not gonna say all, but there's been a lot of the newer construction projects down here geared towards the higher end of the market. Same thing in New York too, and that's what's getting everybody really upset. It seems like a lot of the new permits that are approved are not for normal, affordable housing, but they're for ridiculous, over-the-top, billionaires type row style buildings, which is definitely not helping out anything. Martin says, Tom, is the Freedom Tower lit up in blue? Yeah, it is. So I'm not sure why everything, the Miami skyline is lit up in blue tonight, but everything is lit up in blue. Hey, Ann says, hey Tom, Waldorf Astoria will be northwest corner of Biscayne Boulevard and northeast 3rd Street across from Bayfront Park. Ah, copy that. So this is just the sales office, so thank you for telling me that. So I was looking at, if you look at the Next Miami, it's like a free newsletter that I sign up for. It'll tell you all the new construction projects that are going to be put on in Miami. And one of my good friends sent me an article yesterday that the developers of the Hudson Yards in New York City, Hudson Yards is beautiful, is planning to do something similar here, like almost make a replica style Hudson Yards here, which would be insane. Ken Griffin, obviously from Citadel Securities, is planning on breaking ground on his brand new super tall office building sometime in late 2023, early 2024. But their satellite office is actually in the 200 Southeast Financial Center, where I work out of, in the WeWork. They took over the entire left side of the building. It looks pretty nice. I wanted to stream it tonight, but there were so many people in the offices tonight, which was a little bit out of character because usually Friday nights are totally dead in the office. But for some reason tonight it was packed. Hey, Carson is here, says, evening Tom, good to see you, Carson. Trust you're well, my friend. So one thing I want to talk about in relation to Home Depot's earnings is online sales. Over the past couple streams, we've been talking about, the rise and fall and the successes of major big box retailers. And there's a really big commonality between the big box retailers that are successful and the ones that go out of business, such as the Bed Bath & Beyonds that are probably going to go out of business and the like. And it has to do with their online sales strategy or their e-commerce strategy. You look at Circuit City, They didn't innovate, they didn't build out a big e-commerce business, so they went out of business. You look at Best Buy, they actually did do very, very well in engaging online sales, so they're still in business and they're thriving. You look at Home Depot, they did a phenomenal job of developing the online or e-commerce sales segment, and they did such a good job that this year, or this quarter I should say, in Q2, online sales delivered the highest sales dollar volume in company history. So more than 50% of all the online orders at Home Depot were fulfilled in stores. That means people were buying products and services online, so shopping online via the website, and choosing to pick up those products in stores, driving additional sales volume. So just be cognizant of that if you're ever thinking about an investment into a particular big box retailer. I think the number one thing you need to ask yourself is, what is their go-to-market strategy in relation to e-commerce and the like? And if it's not good and they're really, really struggling with online sales, I would give that a very, very hard pass on that investment. Hey, Jimmy Anderson is here. Says, cheers, man. Hope all is going well. Good to see you, Jimmy. Martin says, is that Bayside Marketplace? This is Bayside Marketplace. We don't usually come here too often on the stream, so it's kind of nice to come here. Oh, that's why. Okay. So there was a police officer that was shot a few days back, lighting the buildings in blue in his honor. Well, I support that. Yeah, the violence in this country has really, really gotten out of hand. Destructionist is a busy spot in the mall, yeah. So Bayside Marketplace is like an indoor, outdoor type mall. I wouldn't really say similar to Brickell City Center, but I think that this place is under massive construction because usually on the streams we would be able to walk all the way in the back here, but it looks like it says Pier 5 coming soon. So maybe they're doing a full revamp, full replace, so. I wonder how that's going to look when it's finished. Hey, Denise, New York City, good to see you. Says if you need a good sandwich place, go check out in Miami, go to Bogle. I'll check it out. I'm going to take a screenshot of that. Mr. Farva 85 says Bed Bath & Beyond could sell off their baby brand and be net positive, saving them from walking off the plank. We'll see if that happens within the coming weeks. Yeah, I think you're right. So I think there was a particular activist investor, and I think he was like 20 years old, and his uncle was, I think, a very, very wealthy pharmaceutical executive. So he raised about $25 million, I think, maybe just shy of 25 million, and became an activist investor in Bed Bath & Beyond. I think making over $150 million in the process, accumulating a massive, massive position in Bed Bath & Beyond. And that was one of his takes. I think he sent a letter to the company or to the board requesting them they do just that. Hey, 925 says, hey Tom, I know right next to the Southeast Financial Center, there's a super tall going up called Bayfront Plaza. Ah, very nice. So it seems like that whole area over there is going to be completely redeveloped. So you have Ken Griffin's, so Citadel Securities, big building, big office tower there. Then you're going to have Waldorf Astoria a little bit further away. So here's like the marina type area. Has a pretty nice view of the skyline of downtown Miami too. Hey, Iris Luce, good evening Tom, good evening everybody, good to see you. Thank you so much for coming. Hope everybody had a good week. We'll walk to the back and then we will head to Brickell. Maybe we'll go to the Riverwalk. I don't think we've been to the Riverwalk in probably, I don't know, I'd say about a month on the stream. Hey, Myra King says, hey Tom, good to see you, Myra. 4U says, hey Tom, and hi everybody, good to see you, 4U. Hope you're having a fantastic Friday. Hope you all have good plans for the weekend and the like. So I think this is some sort of a boat tour here. I think this is like a speedboat that goes a ridiculous amount of speed. Hey, Nakos is here, says grab a drink, Tom. What's up, Nakos? Steve says, Tom, the Waldorf Astoria, in my personal opinion, seems to not be the high-class hotel chain it used to be. I've never stayed there, to be honest. I've never stayed there. Have you ever stayed there in New York City? Does anybody know if the brand new Waldorf Astoria that's going to be built here in downtown Miami is going to be half residences and half a hotel, or is it just going to be all residences? Hey, Dan Zhang is here. It says Friday night in Miami looks really good. Good to see you, Dan. Yeah, so Dan, this is Bayside Marketplace where they have a lot of, I guess you can call this a marina where boats dock, things like that. Sometimes you'll see dolphins popping in and out of here. So this bridge, I think, will take I usually tend, I mean, obviously when I'm in New York, I very seldom stay in a hotel, but this is the Ferris wheel here at Bayside Marketplace. Hey, East Coast is here. What's up? Good to see you. Line Sync is here. Welcome, Line Sync. So we'll walk down the stairs because sometimes you'll be able to see a dolphin, but we'll see. I think this is one of my favorite views right here outside of the Hard Rock Cafe, downtown Miami. Hey, Austin City Limits is, hey Tom, how is the humidity there? The humidity is crazy here, not gonna lie. The humidity is definitely cranking. Let's just say that. Hey, GGMYC, welcome. Yeah, it's definitely a big tourist attraction here. Wendy England, what's up? Hey, Sabrina Fair, happy birthday. I think it's your birthday. I think you told us that last night, I think. So hopefully you're having a good birthday. It's definitely a good day for it. I mean, Friday, start off the weekend. So happy birthday to you. Good to see you. Dan Zanks, is Miami good for outdoor jogging? So I'll be honest, I'm a big runner, but the past 2 days I have not been running outside because it's been way, way, way too hot and humid. But usually in October it gets better. If you're not a fan of the heat and humidity, I definitely would not travel to Miami in August. August is by far the hottest temperature, hottest time in Miami. Even for me, it's pretty hot. And I really, really like it hot. But if you want to come here, I would say the best time to come here is between end of September all the way till about, I would say, end of May. It's actually quite moderate temperatures. You know, you're going to be maybe about 75 to 80 degrees every day. But at night, sometimes it could actually get down to the high 50s. So last year, I barely even ran my air conditioner during the winter because it can get pretty cold. You know, pretty cold being 60 degrees, but you know, for the Miamians, that is definitely freezing. So it seems like all the restaurants here at Bayside Marketplace are pretty packed. I guess we could take that as a little bit of anecdotal data as we're talking about the economy or the health of the economy. It seems like the consumer is pretty strong here in Miami. At least from the restaurants we've walked past in here, I think the crowds have been pretty full. Same thing in New York City when we've been doing our walks and talks in New York. It seems like, especially on the weekends, it seems like there's been almost every restaurant pretty packed, pretty busy. Yeah, Ryan Royals, like the summer has been 10 months long in the South, yeah. Steve says, in my opinion, heat will always be better than the cold. I tend to agree with that. I definitely tend to agree with that, especially because from my time when I used to work downtown in Lower Manhattan, I would have to get to the office by about 8 o'clock, which means I would sometimes have to take the 5:25 train. I would have to sometimes get to the office by 7 a.m. So I would sometimes have to take the 5:25 train from Long Island to Penn Station, and then jump on the 2 train and take it all the way downtown to Wall Street. And during, I'd say, the tail end of December all the way up until March, it is not a good time. Let me just tell you that. It is so freezing there where it's almost, yeah, let's just say I didn't enjoy it. But in the summer, it's fantastic. I think that's one of my favorite locations in New York City is South Street Seaport, but it's almost like it's uninhabitable during the winter, in my opinion. Hey, Lockjaw is here. Says, good evening, Tom. Welcome, Lockjaw. Good to see you. Maurice is here. Good to see you. Defiantly says, which city do you like more, New York City or Miami? So I like Miami more during December. So after the holidays, all the way through May, I like Miami more. So after Christmas, I would want to spend all my time here and then probably come back to New York City maybe at the end of May, like May 25th around my birthday. But then in the summer, I obviously like New York City more. Just because New York City is its own beast in the summer. And I think any, New Yorkers in the chat can really attest to that because we're always locked down in our apartments. It's cold. There's no sun that's out in the winter. So everybody, once it turns spring and summer, everybody just wants to be outside. So I don't think there's any place in the world like New York City in the summer, in my opinion anyway. But in the winter, oh yeah, I'd want to be here every day. Unfortunately, that can't happen. I need to split my time about 50-50 and I can't really pick and choose which days I'm in New York, which days I'm in Miami, unfortunately. But if I could choose, oh my God, after Christmas, I'd boogie on out of here. and be in Miami until my birthday, which is May 25th. Hey, TPAC 5000 says, good evening, good to see you. Yeah, Grand Street Ones is snowbirds. Yeah, there's a lot of people who do that. Dura says, hey Tom, have you seen a lot of Confederate flags down there in the South? I have not seen one. Mike C says, New York City Christmas is so good, it's better to be there than Miami. Yeah, I think the reason why I choose that is because my family's in New York, right? So for the holidays, I want to be near my family, right? But for those of you who are just joining, on tonight's stream, we covered Wayfair. So Wayfair is laying off about 5% of their global workforce, or about 900 jobs. The company said the cuts will go towards managing operating expenses and realigning investment priorities for the long term. Now, the CEO did do an interview and he did come clean, and he said that our financial projections based upon the demand that we were having with the huge COVID boom did not last. And I think, I mean, not to sort of take a shot at the CEO, but at the end of the day, I mean, isn't that obvious? When the housing market was going up 15% a year in some markets, sometimes even more, people were acquiring properties, people were furnishing them. Obviously, that's not going to be sustainable, but at the end of the day, the CEO of Wayfair decided to overhire, which is fine, and now he has to cut costs. But when you cut costs, a lot of people, or when you fire people, lay people off, whatever you want to call it, the more politically correct term would be lay somebody off. It doesn't come with no cost. So if you guys remember, think all the way back to about this time last month, when Microsoft went through the same thing, you usually tend to take a one-time expense hit in terms of severance pay and other benefit pays. So the layoffs are going to cost Wayfair about $30 to $40 million in severance and other benefits. That charge is expected to take a hit in Q3. The stock was down big on the news. Now, obviously, $30 to $40 million, as we compare that to something like a Microsoft, what they paid in severance, which I think was well over $100 million. Obviously, small potatoes, but definitely does impact the bottom line. So I think the next couple quarters for Wayfair is going to be ugly. So, hey, Lemonade is here. Good to see you, Lemonade. Welcome. Good to see you. Hope you're well. War Walker says that's your bus. So that's not my bus. I take the 3. But if you want free transportation, you could take the trolley in Miami. The trolleys are free. Yeah, Steve is like, look at that Lambo. I bet it's good on gas. So did you guys hear the rumors that Lamborghini is going to be coming out with an EV? Did you guys hear that? SME Media says, do you think it's similar to Target's situation? I think Target's situation is more supply chain impacted. Right, and so here's what I've also noticed, and I think it's very important to be cognizant of this. The vast majority of the layoffs that I've been seeing are in customer experience positions. Okay, so why might that be? If we take a look at the big macro picture, why might the majority of the layoffs be in customer experience positions as opposed to customer acquisition positions? Well, the number one thing in order to have a business is you need sales. So very seldom in an economic downturn do you have a big layoff in the sales department. You do have a big layoff in the customer experience department, because usually during an economic boom, the salespeople are selling more, which means if you sell more, there's more customers. And when there's more customers, you need to take care of those customers via customer service. And now that customers have pulled back on spending, you don't need as many customer experience and customer service people. So I think those particular areas may get hit a little bit worse than, let's say, a frontline salesperson would. Hey, Myra King says, Tom, I think Deloitte and a few other tech companies are also laying off. Thoughts on the tech industry? Yeah, so I think what I just said maybe applies to that as well. I think everybody across the board is just trying to trim the fat in this environment. So obviously we had 2 negative GDP prints, 2 consecutive back-to-back quarters of negative GDP prints. So I think a lot of companies are just trying to be a little bit proactive here. To Wayfair's point, right, if we think about a company like Wayfair, if we think about a company like Peloton, which laid off a massive amount of people, those business models were never really sustainable to begin with. So Wayfair, even though it's a good business, it's a good company, they had to hire a ton of people to keep up with all the pandemic demand. Right, everybody was buying new homes, everybody was moving into a new apartment, and when they did that, people had to furnish those apartments. So they bought all of their furniture off of Wayfair, they shopped online. So to keep up with that demand, Wayfair needed to hire more people, and now that that demand has cooled off a little bit, they don't need as many employees. Now, the way I interpret that is not, oh, this is Armageddon and consumers aren't spending. That's not the way I interpret it. The way I interpret it is spending is coming down to the mean. So just like in finance, when you talk about the equity market, there's a theory out there that you can have a mean reversion trade where things revert to the mean. And I think consumer spending is reverting to the mean, which means you're not going to have this crazy COVID spending like we did. There's no more stimulus checks. There's none of that anymore. So workforces will need to adjust accordingly. In terms of the tech side of things, earnings season has actually been pretty good. You know, record profits, not a lot of margin compression. We covered Alphabet, we covered Microsoft, which those 2 companies in particular announced layoffs as well. I think Microsoft is spending something like $100 million on severance pay. But earnings was actually pretty solid. Their Azure department, which is their cloud computing unit, did very, very well. But I think they're just trying to cut costs just to be proactive. And again, if you notice where the layoffs were, they're not really in the frontline sales department. It's more customer experience, which is unfortunate. You never want to see jobs lost, but I think if, you know, one of my old managers told me this. He says the closer you are to the revenue, the more job security you're going to have, regardless of any type of economic storm that passes, right? Because if you are impacting directly revenue, they're probably not going to get rid of you. They're probably going to get rid of somebody in the back office first. Hey, Sophie M is here. Says, good morning, Tom, from Australia. Looks like another beautiful Friday evening in Miami, Florida. Sophie, good to see you. We have about, I think, 8% of the viewers on Walks on Wall Street are from Australia. So that is awesome. Thank you for being here. Check out this beautiful big American flag that's directly outside of the 200 Southeast Financial Center. Yeah, Myra King's like, whoa, that was loud. Hey, Alex L is cutting costs in favor of faulty automation spells gloom for their stocks. Good to see you, Alex. Austin City Limits is Tom. On the stock market news today, it was mentioned that it was almost definite that the Feds will raise rates 50 to 75 basis points in September. Yeah, so that's pretty constant with what it was. Wednesday, we actually heard from the Federal Reserve their minutes. So we heard the Fed minutes from the last FOMC meeting. I don't think there's going to be any real material changes here. I think we're just going to get a basic 50 to 75 basis point rate hike. Here, I'll give you guys one more shot. Hey, thank you for the 25 SAR donation. Thank you so much, my friend. Thank you for watching. Hopefully you're enjoying Miami, Florida. So this is where I work. Well, one of the places that we work. So WeWork is like a co-sharing office space, and I think it's a really innovative idea. Now, a lot of people give WeWork a lot of flack because Adam Neumann, the founder and CEO, took a lot of these SoftBank funds, and SoftBank is a Japanese conglomerate company led by Masayoshi Son, and he squandered a lot of that money, which again, I think that's unethical. I understand that, but the idea of WeWork is very profound, and I think it's fantastic. I've had nothing but good experiences with WeWork, and I think that the pandemic has impacted a business model such as WeWork very favorably. And just from being in a lot of these offices, they are absolutely packed. You can, if you wanted to reserve a space in the Brickell City Center WeWork, it's like you can't even stand up in there, it's so crowded. The 200 Southeast Financial Center is a little bit better, but in essence, what I think is going to happen as the hybrid workforce environment becomes a little bit more acceptable and more of the norm, I think gone are the days where these large corporations are going to sign multi-year leases. They may just do something that's a month-to-month or maybe a year lease in a WeWork and have their employees travel all over the country working out of a satellite office. So I think that trend is probably going to be something that'll play out. Hey, a viewer from Korea says, Miami looks amazing. Good to see you. Welcome to all of our Korean viewers. Hopefully you're doing well. If you guys are enjoying the live stream tonight, feel free to leave a like on the video and subscribe to the channel if you are new. We usually do these streams around 5 days a week between New York City and Miami. Hey, the ABX girl is here. Says, hey Tom, good to see you, ABX girl. Jared Covey says, Twilio has recently hacked 1,900 Signal users affected. Oh, Twilio was recently hacked. Yeah, I heard about that too. That's really crazy. So Twilio is a company that does like SMS messaging. Good night, guys. So very early on when Twilio became public, I believe the ticker symbol is TWLO, Twilio signed a big deal with Uber. So if anybody's taken an Uber, why did I just say that? People have taken Ubers before. You guys have probably all taken Ubers. But anytime you take an Uber and you receive a text message saying, oh, your Uber driver is 10 to 15 minutes away, that's Twilio. So Twilio has all of the hooks in the back end to send those text messages out to customers of Uber, right? Another good example would be like a CVS pharmacy. So for example, I actually just picked up a prescription today at a CVS, and they texted me, hey Tom, your prescription is ready, please come and pick it up. That is all Twilio doing that, right? So the theory there is you could drive customer acquisition and customer retention by sending out SMS and keeping in touch with your clients that way. So I heard about that, Jared. I didn't know it was 1,900 people. Or was it 19,000 or 1,900? Let me see. Hey, Daryl is here. Says, hello, Tom, from Chicago, Illinois. Good to see you, Daryl. 61 says, hey, Tom, did you hear about Apple doing a software update due to serious vulnerabilities? I haven't heard about that. I heard about the whole craziness that's going on with the App Store, and a lot of people are not happy about that. Hey, retired in Florida. This is, hey, Tom, your position on Occidental Petroleum after Warren Buffett gets permission to buy half all of the company. Will Berkshire try to buy out the entire remaining shares of Occidental Petroleum? I'm actually not sure, retired in Florida guy. So we were talking about that a little bit earlier in the stream, and here's my take on it. And again, take this with a grain of salt because Warren Buffett is who he is, and I am who I am. So you can't even compare the two. Here's what I think. I think it's a little bit strange that Warren Buffett would be taking such a massive position in an oil company when I believe prices generally have peaked. Does that make sense? Now, I could be totally wrong. And again, Warren Buffett is the greatest investor of all time, and I'm not, right? So maybe he's right. Maybe I'm wrong. Maybe I'm right and he's wrong. But I find it very peculiar why he would take such a massive position in Oxy when this seems to be the top in the commodities cycle. Now, again, I just want to make the statement that I am 100% open to being wrong. I could be totally wrong, and maybe, crude oil makes another all-time high, but I highly doubt it. I think the March high for crude, ticker symbol CL, was the high, and that was 130. I think we're trading at around $90 a barrel. So I don't know. It's obviously a profitable business. Warren Buffett's a smart guy. He's made multi-billions of dollars. Would I personally do that? No, but then again, what do I know? Wendy England says, hey Tom, I'm holding on to all of my Shell stock. Yeah, so Shell, I think it was Shell, Chevron, and one other oil company, ExxonMobil. Combined Q2 profits were about $42 billion. That's absolutely ridiculous. Talk about a rip your face off profitability quarter for the oil companies, not only to be topped by Saudi Aramco. So Saudi Arabia's Aramco, obviously one of the most profitable companies in the entire world, reported more net income than those three companies combined, about $48 billion in Q2 alone from Saudi Aramco. Really, really crazy stuff there. This is the Citibank building, and this is the Aston Martin building, which I believe is going to be complete rather soon, actually. And here we have the W Hotel and Tower. Hey, photos from around New York. Happy Friday, my friend. Good to see you, photos. Peter Webley says Oxy has some kind of carbon credit deal that could be worth billions. Well, I think a lot of the oil companies have that as well. But I don't know, maybe you're right. What are they trying to do? I'm not too familiar with it, but I've heard about it, where they're trying to do like carbon offsets, something by, I don't know, I forget, but in any event. J22 says most of Miami looks very upscale. Well, this is the sort of downtown Brickell type neighborhood, which is where a lot of like the business activity happens, things like that. Hey, FredX is here, good to see you. DJC says 50% of their business is natural gas. Watch what happens to natural gas this winter, given that Russia situation in Central Eastern Europe. Yeah, so DJC, I think that in the United States, we probably won't have a problem, but what are your thoughts about like Germany and all those other countries that were really, really, I guess you could say stupid, to essentially have their whole entire energy infrastructure rely on Russia? That's a good point. That's a good point. Yeah, Peter Webley's like, Buffett definitely knows what he's doing. But DJC, that's actually a very good comment there. That's a really good point. Jesus, Tom, what do you think about the 20-year-old USC student who invested in Bed Bath & Beyond? Yeah, so we actually were just talking about that. So he raised about $25 million, and I think his uncle is a very, very well-known pharmaceutical executive. I think he may have sold a couple pharmaceutical companies in his day. So he raised about $25 million from family and friends, which is extremely impressive. Even if you come from an ultra-high net worth family, which he did, that's still pretty impressive to do at 20 years old. He accumulated a very, very big stake in Bed Bath & Beyond. I think it was well over, I'm not really too sure the position size, but during this whole gamma squeeze craziness, he offloaded the position. I believe he made, I think, over 150 million. Maybe it was like 110, 150 million dollars. But one of the things I'll say about that, the media will run those type of stories, and I think it can give off the wrong impression. And here's what I mean. 90% of the average retail investor lost their shirt on all the meme stock nonsense. Okay, so I think that's a great story. I'm happy for the kid. I hope he makes $1 billion in his investing career. But the average retail investors should, in my opinion, should stay away from all the meme stuff, in my view. Like, stay away from the GameStop, stay away from the Bed Bath & Beyonds. Because at the end of the day, and this is something we talk about a lot on the streams too, this is why I think activist investing or active investing actually plays a role on Wall Street. Because he didn't just buy Bed Bath & Beyond just to get a laugh out of things. If you actually looked into what he did, he acquired a large enough stake in the position so he could actually have some say in how to operate the business, right? So a lot of the times, activist investors, what they'll do is they'll acquire a massive, massive stake in a company and then try to influence the business to say, hey, you could be doing this better to increase your profitability. You could be doing X, Y, and Z, fire this person. So that was sort of his standpoint. His standpoint wasn't, oh, let me just dump a bunch of money, of my uncle's money in here and, trying to make some money off of a laugh. So, hey, Minnesota Walking says, yes, Tom, they want people to think he was just some average kid, but it couldn't be further from the truth. Yeah, I mean, he's obviously a very, very sophisticated investor that comes from a very, very well-respected family in the pharmaceutical industry. So the kid's very sharp, extremely smart. And I think the media outlets are running it like, yeah, it's all the GameStop Redditors. This kid wasn't a Redditor, so. Yeah, Walking Minnesota says, yes, he was even reaching out to the board of directors, if I recall correctly. Yeah, so that is like what the textbook, when we talk about on the stream, like an activist investor, right? So you could think about what Bill Ackman used to do. Things like that. Let me press the walk button here. Usually Miami has 20-hour traffic lights. Hey, Taco Ortegra says, hey Tom, I'm a new subscriber. I am enjoying the conversation and video. You are amazing. Hey, you are amazing too. Thank you for being here. We appreciate it. Thank you for joining. And I wish you a very happy Friday. Thank you for being here, all of our new people. Dukes is furloughed, tax scandals, and resellers in the bag. Line Sync, welcome. 925 says, Tom, the ASHTMR residences should be completed in the span of 2 to 3 weeks or even a month, according to a good amount of sources. Wow. Really? Well, when we cross, it doesn't look like many of the windows are in there, but who knows? We'll check it out. Thank you for saying that. Gene says, and inflation will pick up again in the winter with Germany energy problems. Christian Wilson, welcome. For you says, Tom, where do you see the crypto space in 5 years? I'm just going to cross the street, and if we get absolutely plastered by a car, so be it. Here's where I see the crypto space in 10 years. I see a lot of the alternative altcoins going to zero, and I see probably Bitcoin trading around $150,000, $100,000. Now, again, I hate saying these type of things because I actually think that's a bit irresponsible, because even though I know that everybody knows this isn't investing advice or anything, but there will be people that'll just buy things because I think I'm bullish on something over the long term. So do not formulate your investing thesis based upon what I say. This stream is just about talking amongst each other, having a good time, and analyzing different companies' earnings reports and sort of talking about economics from a macro level. So just know that I could be wrong, but that's where I see the cryptocurrency environment in 10 years. I see all of these alternative coins, or let's say 90% of them, will probably go to zero. A lot of them are going to zero right now because they're frauds, and I've been saying this on the stream. But I think Bitcoin in 10 years will probably be trading around, 100, 150,000. But this is the City National Bank building here. Ooh, we're gonna get to see the drawbridge go up. Hey, Diana says, hey Tom, I'm from Fort Lauderdale. I'll be majoring in finance this fall. Do you have any tips for internships and breaking into the industry? Yes. So if you want to work at the investment bank, what you want to do is you have to apply to the summer analyst positions. So I would figure out what you like to do, right? Do you want to focus on mergers and acquisitions, so M&A business? Or do you want to be in sales and trading, right? Or maybe you want to be back office or something like that. But the topic of tonight's stream was Home Depot, so we were analyzing Home Depot's earnings report. So here's a little piece of advice that I would give somebody that wants to break into investment banking and that really wants to impress the hiring manager that's going to hire a lot of the interns. So here's what I'd say. What you should be doing is, in your spare time and on the weekends, pick any company you want, go to their investor relations page, and read through the earnings transcript, because that is going to afford you the opportunity to understand the exact questions that many investment banking analysts ask C-level executives on conference calls. So for example, usually the way an earnings call works is you'll have the CEO make the opening statements, give a little bit of a forecast on the business, and then they will turn it over to the CFO or Chief Financial Officer, where he will hammer through the very intricacies and detailed financials of the business, maybe provide some forward guidance, and then after, they will do a Q&A session, so a question and answer session. And the reason why it's so critical to really pay attention to this, because let's say if you're applying for an equity research summer analyst position or whatever it is, you want to be able to know the exact verbiage and the lingo that existing senior analysts talk about, right? So if you scroll all the way to the bottom of the earnings report, they'll say, okay, the next question is from Tom from Goldman Sachs. Proceed with your question. And then they'll say something along the lines of, hey, hope you guys are doing well, great quarter, congratulations. And then they'll ask a question, right? You want to become extremely acclimated with the exact questions that those analysts are asking. So if you're a freshman or sophomore or junior in college and you go into the interview and you're like, yeah, I've been listening to all these earnings reports, this was a really good question, I thought it was very thought-provoking, they're going to be blown away, because I can guarantee you nobody is doing that type of work, and very few people have any idea what they're talking about, especially college kids. So if you can go into the interview and really blow them away by saying, hey, I was on this earnings conference call, I loved how the UBS analyst asked this question, I loved how the Jefferies analyst asked this question in relation to forward guidance. That's, I guess, the big piece of advice that I do. Second is definitely just got to network, especially if you want to get into investment banking. Networking is number one. Ooh, Destructionist says, let's see the boats going by. Yeah, it doesn't even look like there's anything going by. Maybe it's coming from the other side, but who knows? Willie, good to see you, welcome. OT is here, so sup, man, good to see you, Willie. .48 says, I think you were correct in regard to Bitcoin. Many altcoins will not be around. Yeah, and I think a lot of the altcoins are scams. I think they're like blatant outright scams. And the reason why I don't touch them is because I think they're securities, right? With the very limited knowledge that I know of securities law, I mean, by definition, a lot of these companies or cryptocurrency projects are securities. Yeah, Gregory's like, I bet it's something small coming across. Well, let's see. Oh, here it is. You see something coming across. Diana says, thank you so much for the advice. I appreciate it. No problem. So Diana, this is what I would also do. I would see, oh, check out this boat. Let's see what it is. I think it's like a container cargo ship, I think it looks like. So Diana, here's another thing I would do, and I would do this like immediately today. I would see if your school offers a free subscription to the Wall Street Journal or Investor's Business Daily. And I'm sure they do. I think all colleges, if you go to the library, they probably have like a free subscription for like a student. Even if you have to pay $10 a month, do it. Just so you can read some of the articles and just get accustomed to business information, right? You want to know the lingo and you're going to start to learn. If you read, if you force yourself to read a couple articles a day out of Investor's Business Daily or the Wall Street Journal, you're going to be leaps and bounds ahead of any of the other investment banking analysts. Also, shameless plug here, I do write a free financial newsletter that covers not only the US equity market, but emerging markets, fixed income. And if you scan the QR code on your screen, it'll bring you to a landing page. If you punch in your email, you could sign up for free. And I usually send the newsletter every other Tuesday after the market closes. And I try to take a very holistic approach, a macro approach, and then whittle down to more industry segments. So I think reading that newsletter will be a little bit better as well. Oh, FredX's left side? The left side is better or the right side is better? Because on my screen, the chat is on the left side. But yeah, if you scan the QR code, a lot of the topics that we talk about on the stream, I break it down in the newsletter a little bit more clear. Jay Masters here, welcome Jay. CRC says, what's your education background? You are extremely well articulated. I went to a very, very small college in New York City, in the City University in New York, called John Jay College of Criminal Justice. So I actually majored in criminal justice, I minored in economics, and I was going to be a police officer in the NYPD. But then I went into enterprise tech sales. So now I sell large software and hardware to Fortune 500 and Fortune 50 companies. So anyway, the deal size is usually like $500,000 to over $1 million. But yeah, if you scan the QR code, you could read my newsletter for free. It's a cool, fun way to support the channel. I'm not gonna lie, guys, I'm a little bit bummed out that we're not seeing any dolphins on the stream. Maybe it's just not the season for the dolphins yet. Oh, Alex Lopez says, my sister went to John Jay. Nice. Yeah, I mean, I think if you're from New York or you're a New Yorker, if you go to a CUNY school, I think it's pretty good value. I mean, you really get what you pay for, but look, I mean, it was an education, right? It's not like I went to a top 50 school, but I didn't want to go into debt for college. It was like $3,000 a year. So this is the Aston Martin building. Ooh, this building looks really nice. Yeah, David's like, I started off in a criminal justice major too, glad I didn't pursue it. Yeah, I mean, yeah, let's just say that. Yeah. Because I didn't really come from a background or a family that went to college. My brother was the first person in our entire family to go to like a 4-year university. So we didn't know about like all the lucrative careers out there in software, investment banking. But, as I was going to college in the city, networking and talking with other people, they're like, dude, don't become a cop. You could make 7x, 10x that selling software, selling hardware, working at a tech company or a big telecom company. So that's sort of the route that I took. And at the time when I wanted to become a police officer, it was rather dangerous in New York. And I just wasn't worth it. I didn't want to deal with it. So that's why I have so much respect for law enforcement. It's not even to be believed, because the pay is not very good and they have to deal with so much nonsense. So huge supporter of law enforcement. I back the police 100%. Also the FDNY, fire departments around the country. So this is the Icon Brickle. That was loud. Brian says, I went to State College, majored in accounting, but now doing information management analysis. Very nice. Love that. So I'll let you guys decide since it's Friday. So here's the only downside of Miami. Anytime the bridge goes up, look at how crazy the traffic gets. It gets ridiculous. Should we take a walk through the Icon Brickle parking garage? Because it looks kind of cool in there. Or do you guys want to head down to Mary Brickle Village? I'll let you guys decide. Hey, Alex Lopez says, Tom, I was there in APR. Oh, a very expensive hotel. Yeah, so the W Hotel I think is expensive, right? I think this is another one of those deals where the left side of the building is hotels, but the right side is residences. I think you could buy condominiums here too. I think you could actually maybe buy a small apartment. You know, when I first moved down here, I was so tempted to buy like a really nice studio apartment down here overlooking the water. But I wound up just buying a single family that is now a legal 2-family just so I could rent it out and generate income. But if you think about New York pricing and you think about Miami pricing, even though Miami is ridiculous, you can get a really nice studio apartment, maybe like a 1-bedroom for like $400,000 to $500,000. You have a pretty nice view of the water too. Martin says you think it stands for the Wyndham Hotel. Got it. 61 says hopefully the security guy will not stop you and yell at you. They never yelled at me. Josie, good to see you. Jay Masters says, Tom, do you go down to the Florida Keys? You know, I've never been to the Florida Keys before, and I really want to go. I just never had it. I just never have any time. Also, I don't really have a means to get there because I don't drive and I don't have a car. I think it's probably going to take 20 minutes to cross here, but just as a quick review, everybody, we were talking about Home Depot. Earnings, pretty good quarter. So EPS came in right around $5.05. Analysts on Wall Street were expecting $4.94. If we talk about revenues to the top line, they also smashed that. $43.79 billion versus $43.43 billion in revenue for Home Depot. E-commerce was a bright spot. So this quarter in Q2 was the highest sales volume for Home Depot in company history as it relates to online sales volumes. And the reason why I tend to look at this statistic when we're talking about big box retailers such as, you know, Home Depot, Lowe's, Walmart, is because look back at what happened over the course of the last 10 years, maybe even longer. You had a lot of companies that refused to adapt to an e-commerce environment go out of business. Like Circuit City is probably the number one company that I would think about, right? So you have Circuit City going out of business because their CEO and their C-suite refused to make the transition and the investment into a pure play e-commerce environment. So Home Depot was very, very successful in doing that. We have Best Buy that is very, very successful in doing that. Home Depot continues to invest into their online product offerings. They continue to invest into their application, their mobile application, and it's helping them drive sales. So they're doing really phenomenal on that front. Geraldo says, Tom, have you been in Miami on New Year's? Ooh, I have not. So I haven't been in Miami on New Year's, but usually I'm in New York City for that. Hey, Billy says, yeah, I'll take my 1-bedroom, 1-bathroom apartment a block away from the beach in San Diego for less than that. Ooh, nice. So Billy, do you have a nice view of the ocean? That's awesome, man. So how much would a 1-bedroom, 1-bathroom apartment in San Diego be, out of curiosity? DJC says, what are your views on the economic forecasting for average working Americans without investments over the next 2 years? Let me read that again, DJC. It says, what are your views on the average economic forecasting for average working Americans without any investments over the next 2 years? I'm not sure if that's a trick question, but not good. Right? I mean, if you don't have any investments, that's definitely not good. Well, here's what I'll say. That's why I tend to be in the camp that it's more important for the Federal Reserve to really knock down inflation as fast as possible, as opposed to being a cheerleader for the equity market. Because again, I'll say again, the vast majority of people out there do not own equities or assets such as real estate. I think about 90% of all the equities in the United States are owned by the top 10% of Americans. So if you are a working class person with very little investments, living off of a fixed budget, let's say if your food bill is $500 a month to feed your family, and inflation, the CPI I think was about 8.1%. If you dig deep down to the CPI report, it says food you buy at home went up about 7.1% year over year. Well, that's going to throw off your entire budget, right? That could literally mean having an average American person making a choice between feeding their family or paying the water bill or the electrical bill. So inflation is a much bigger deal than many people realize, because regardless of what CNN Business tells you, inflation does not hurt wealthy people. Okay, inflation helps wealthy people. Inflation destroys the middle class and the lower class because they're living on fixed budgets and fixed incomes. And if you budget and you only have $500 available a month for food, but now in order to get the same products, it's going to cost you $560. Well, now you're upside down, and that's an issue. So I think if the Federal Reserve was really serious about getting inflation under control, they would revert back to what Paul Volcker did back in the day, where he freaking jacked rates 20%, killed inflation. But what's that going to do if we jack rates 20%? The equity market is going to be cut in half, probably more. You'd probably see about a 60% decline in the S&P. So yeah, that's what I'd say. Jay, good to see you. Geraldo says, Tom, have you ever talked about Warren Buffett? Yeah, so we talked about him quite a bit tonight because his company, Berkshire Hathaway, acquired a 50% stake in Occidental Petroleum, ticker symbol OXY. But if you guys are enjoying the stream tonight, feel free to hit the like button and subscribe to the channel if you are new. Let's see. Hey, FredX, what's up? Good to see you. So DJC, here's what I would say. Here's another, and again, a lot of these things that I'm saying, they're opinionated, right? These are my opinions. You would have people that would argue against me, and I'm fine with that. But I always like to say that, like, this is the sort of principles that I live by. I think if you're young, if somebody's watching this, maybe you're just graduating college, here is a hack that you can do that is going to set you apart and literally change your life. So here's what I do, because this is what I did. When you're just graduating school and you get your first job, you're going to be very, very tempted to blow all your money. Because I'm going to talk for the majority of people. I know there's people that are in high school that have been working throughout high school and making a lot of money. But for the average person out there, when you get your first job out of college, I think that's a Rolls Royce over here. When you get your first job out of college, maybe you're making 50, 60, 90 grand, I don't know. If you work in tech, you're probably going to come out swinging at around 100,000. You're going to be walking into so much money that you really won't know what to do with it, and you're probably going to wind up blowing it, going out to the bars, partying with your friends. However, here's what I will do, and if you do this, you're going to thank yourself, and you're going to thank me 20 years down the line. What you want to do is you want to come to terms with yourself and say, I'm going to sacrifice 3 years of my life. Let's say if you graduate college at 21, you're going to sacrifice 22, 23, and 24. You're not going to have any fun. You're not going to talk to any friends. You're going to be a hermit, and you are going to wake up every day breathing fire at your job. Whether you're in sales, whether you're an investment banker, you are going to focus on one thing: generate revenue, make money, and bank it. And after 3 years, you're probably going to have a couple $100 grand saved, right? And you're going to be surprised. And many of you listening are going to be saying, no way, save a couple $100 grand. Yes, you can. If you really just put all of your focus into your job, maybe you have a sales job, maybe you're in investment banking, maybe you're in consulting, maybe you're a nurse. If you live with roommates, live below your means, do nothing for 3 years, save a couple $100 grand, what you want to do is, I think this is I think she's very famous here. What you want to do is find a duplex or a triplex or even a single family home that you can house hack. You're going to purchase a piece of property. You're going to either move roommates into your house and have your roommates pay down the debt for you, or you're going to start an Airbnb business in your property, and now you're going to live completely for free, and you're going to have a paid off house by the time you're 40, and that asset's probably going to be worth $500,000 or more while generating cash flow. Because the number one mistake that I see from a lot of my older coworkers is they're still focused on paying off their mortgage. Maybe they've gone through a divorce, so they're having to pay alimony. They're having to take out additional loans to send their kids to school, and they don't have their house paid off yet. So if you're young and you can acquire a property and sacrifice and either live with roommates, either house hack, or run an Airbnb business, or just buy a duplex where you live on one side and you rent out the other, that is like the ultimate survival guide in an inflationary environment. Because what is the number one thing in the news right now? The number one thing in the news right now is rents are going gangbusters. If you acquire a piece of property with a fixed rate mortgage and don't get an adjustable rate, you're going to have a fixed cost in perpetuity forever, outside of your utilities, outside of the electric. But what you want to do is you want to offset that cost to tenants, and now you live free, right? You put down $100 grand, or maybe if you want to use more leverage, that's fine by you. But now you totally erased all living expenses. So that's sort of what I would recommend. Willius is a retired nurse here. Listen to him. Yeah, I mean, it's tough, right? Because especially if you live in New York City or Miami and you're coming out of college and you want to go out and hang out with your friends, trust me, 21 to 25 feels the same. You feel the same. But it's nice to have a piece of property in your mid to early 20s and some savings. It feels nice. So definitely do that. Hey, what's next is sacrifice now, to retire early with passive income? Yeah, so I think I'll probably always be working forever, just because I think that's just in my nature. I don't know. Oh, it looks like there's an interview here. Oh, I think I know these guys. Well, not know them personally, but I think I've seen their stuff. I think they ask people about like what they do in their, like for work or their channel. Hey. Steve says history repeats itself. We are now in 1976 time frame, so maybe a stagflation time frame in the 70s. Yes, Forever 18. Ooh, we've already been streaming for an hour and a half. I actually have to head out. Hey, War Walker, thank you so much for joining tonight. I appreciate it. Yeah, so Gene says, I think Warren Buffett believes oil will go back up over the winter with the European energy crisis. Yeah, so I think DJC said that about 50% of their business is natural gas. So potentially that could be an additional catalyst with all like the craziness that's going on in Europe. Unfortunately, Germany is extremely dependent on Russia for energy. And we won't go into why. I don't really want to get too political, but yeah, I think you could be right. Look, I don't really have any exposure to oil and gas right now. I actually think the energy cycle has topped, but then again, I'm not Warren Buffett. So I think there's an Equinox in this building. We'll do one lap around Mary Brickell Village and then we got to head back over because I do have to get up, well, I do have to do some yard work tonight. I wanted to do it earlier today, but it's way too hot. The Y Productions is, in your opinion, what are the best REITs to invest in at the moment? Unfortunately, I can't give like specific stock tips. That's just not really what we do here, but I would just be very cognizant. So let's say if like you're looking at a Simon Properties Group, right? I think their ticker symbol SPG. You want to be very cognizant of their cash flows during this time. And if you want to look at their earnings, so if you go to like Simon Properties investor relation page, one of the things that you should look for are rent renewals. So are people renewing, are people defaulting, and is that taking a material hit to cash flows? So REITs in this environment, I mean, many people would say as the Fed continues to raise interest rates, that could potentially put pressure on the housing market and make real estate values go down. So just be cognizant of that when investing in REITs. But I can't give like a specific recommendation. It's just, I'm not licensed for any of that. Alex Lopez, I'm going to be leaving for now. We have to hook up one day and go grab pizza in South Beach. Yeah, 100%, Alex. Thank you for coming tonight. Appreciate it, man. Hey, Eduardo is here. Says, hey, my friend, I watch all your lives. Man, is there a Japanese community out there? I made friends with the Japanese girl, but I'm afraid she's being a fake. I don't know, dude. But thank you for watching, man. I'm just not too sure about any of that. Line Sync says, in 40 years, Tom, in 2062, who knows what will happen between now and then, I know. Should we take the Metro Mover back? I don't know. I think there's too many people out tonight for the Metro Mover. I don't like to get on public transit with the camera. I think it can draw too much attention. Hey, Racy says, why don't you drive in Florida? I don't know. I think the public transit gets me around just fine. I mean, I usually take the bus. It takes about 40 minutes to get back to my house, so I don't know. I never really had an issue with it. Hey, Gardenia is here. Says hello. Welcome, Gardenia. Yes, Forever 18 says Simon property was so cheap 2 years ago, but I haven't invested that much. Now, oh, and you've sold it? Just hold for a few years, months and sold. Got it. So I think for the average person, I would say the majority of my net worth that's in equities is actually indexed. Well, I don't know if I should say the majority, maybe it's about 50-50. So in my retirement accounts, like an IRA, right? Pretty much my entire IRA is just indexed to the S&P 500. So a good book to read is Common Sense Investing by Jack Bogle or John Bogle. And Jack Bogle was the CEO and founder of the Vanguard Group. Unfortunately, he did pass away a couple of years ago, but he really exposed all of the crazy, egregious fees on Wall Street. So back in the day, if you wanted to buy a mutual fund or something like that, you would have to pay about a 5% front-end load fee, a 2% management fee every year, and if you wanted to sell out of the investment, you pay a 5% back-end load fee. So think about that. I mean, if you wanted to invest, let's say $100,000 into a mutual fund, they're going to take 5% right off the top there automatically, which is crazy. So Jack Bogle was like, regardless of equity market performance, what's happening is the retail investor is being fleeced. They're getting their heads ripped off each and every day when the mutual fund managers are running away with all the money. So what we should be doing is creating a very low-cost option for the average American to buy the general broader stock market, right? So if you invest into an S&P 500 index fund, you will be getting exposure to America's largest and most profitable 500 companies with a very, very low expense ratio. I think you could even buy some index funds now that have no expense ratio. And I would I can't recommend you do anything, but there's been multiple studies on Wall Street that says the number one thing that influences stock market performance is the reduction of management fees. So if you're buying an ETF or an exchange traded fund, I think that's a teddy bear in this guy's passenger seat. If you're buying an ETF or an exchange traded fund that's ripping 2%, or 200 basis points from you every year, just like compounding interest is the eighth wonder of the world, compounding interest can work against you. And 2% a year compounded over your investing career is a lot of money. So I think if you can lower your fees, lower your expenses, it's probably going to be best, I would say. Yeah, Dan Zhang says Vanguard has the lowest management fees, even lower than SPY. So maybe you guys could look this up. Oh, beautiful dog. Maybe you guys could look this up, but I think Fidelity has. I think Fidelity may have an index fund that has no fees. Is that true? I mean, I don't know, but I think they may have an S&P 500 index fund that has 0 fees. But then, so that's like in my IRA, right? But I do run a long-short portfolio, sort of like a hedge fund style, in like an interactive broker's account to try to generate alpha. Dan Zhang says, "Wow, that's a Ferrari F8 that just drove by." Really? Now I can. How much do you think that a car like that costs? What do you think? Hey, Dolly Girl Twins, good to see you. Says, hey everybody, Tom, will you be visiting the Dolphins tonight? I mean, we tried, but for some reason, there's not a lot out tonight. We'll check again as we walk back. Hey, Andy says, nice car, good to see you. Andy from South Korea, welcome. SDK, Pilot 11 says, yes, Fidelity has 0. So think about that. So I'll give you guys a little bit of insight on the ETF industry. Hopefully none of the big money managers are watching. So there was a study that was done, and you guys could do this yourself. So here's where a lot of these ETF companies will get you, right? So an ETF is an exchange traded fund. Ooh, they cost $300,000 for the car? Jesus. You could buy a house. You could buy a car, you could buy a house. Yeah, I'm not a big car guy, so I'm a little bit oblivious to all that stuff. So let's say if you take an ETF that markets itself as a green energy ETF, okay? They say if you buy into our ETF, you are going to get gross exposure to clean energy. All right, fair enough. So you're marketing it as if somebody, wants to be environmentally conscious or environmentally friendly, they could buy this particular exchange traded fund and get exposure to companies that have a good ESG score or something like that, which I think that's respectable. However, here's where the issue lies. And I want you guys to do your own homework on this because I've done much work on this. Go to the prospectus. In that particular, go to the prospectus. Oh, this is my favorite Argentine restaurant. So go to any ETF that you're looking to buy, you think that's great. Go to the prospectus and look at the expense ratios. Oftentimes it'll be like 1.5% to 2%. And if you scroll down and you look at the contents of that ETF, it literally has almost the same exact beta as the S&P 500. Almost every single one. Now, I'm not going to say all of them, but almost every single one, their beta is literally 1-to-1 with the S&P 500. So essentially what that means is if the S&P 500 is up 1%, that particular ETF will be up 1%. And the reason for that is if you look at the top 10 holdings of that particular ETF, it's literally the same thing as the S&P. It's Apple, it's Microsoft, it's Amazon. And at the very bottom, it may have like 2 or 3% in like a solar stock. I mean, it's just such a scam. Well, I shouldn't say scam, but I think it's a little bit of a deceptive marketing practice because a lot of these ETFs are the exact same weighting as the S&P 500, and they may just have a little bit more exposure to a couple solar stocks. So check it out. Pull up any ETF that you think is maybe innovative or interesting, and I will bet you almost 100% the top 5 holdings will be very close to the top 5 holdings in the S&P. It'll probably be Apple, it'll probably be Amazon, Microsoft, and then maybe like the 10th or the 11th stock that the ETF owns will be like Enphase Solar or Plug Power or something like that. But the beta is very similar, very similar. Dan Zhang says you can't say Ferrari is a waste of money if you don't understand cars. So that's true. I think there's a huge market out there. I think some of the Ferraris have sold at auction for like $20 million, I think, maybe even more. I think there's a statistic out there, Dan, to your point, that alternative investments have actually outperformed traditional investments in like equities. So you could think about like fine pieces of art. You could think about like very high-end luxury cars. So I think you're right. I think you actually may be right. Hey, Leah is here. Good to see you, Leah. Welcome. Wow, Dan's like, Tom, the one you just saw can go between $800 to $1 million right now. My God. I've noticed we tend to see more like supercars, like high-end cars here in Miami, as opposed to New York. I think it's just because there's way too much traffic and the weather is horrible in New York. So it would maybe ding and dent up all the cars. Steve says every mile that you put on a Ferrari could potentially kill the value of it. What's next is like you're doing yard work tonight, Tom. Is that like a cocaine reference? Because I've had multiple people in the chat say that may be a cocaine reference, which I'm totally oblivious of. Is that like from a movie or something? If somebody says they're doing yard work, that means they're going to do cocaine? Because if so, I'm totally oblivious to that. No, I actually have to do a ton of yard work because I tried to do it very early this morning and it was so hot and humid that I'm like, it's just never going to work out. If you do any type of manual labor, oh, check out this dog on the floor here. If you do any type of manual labor during the day in August in southern Florida, you're gonna have to take like 10 showers back to back and sit in the air conditioning with the refrigerator door open. So look, if I turn on all the exterior lights of the house, I can get after it and then I'm not sweating. Fredx is like dog drink. So funny. Hey, the Mighty Bull. What's up? Good to see you, Mighty Bull. Thank you for joining on this Friday night. 11 says, looks like restaurants are full. What a recession. Yeah. I think you're right. You know, here's another piece of economic data that we were talking about last night as it relates to existing home sales. So if you think about existing home sales in the range of about $100,000 to $250,000 a year, the total transaction volume of sales in that price range were down about 39% year over year. If you ratchet that up to about 750,000 to $1 million, that sales volume was only down about 8%, and anything over $1 million was down around 10%. Now, why do we think that sales transactions for single-family homes would be way, way less for the technical, more affordable homes? Well, I think it's important to understand the type of demographics who are looking for those particular properties, right? You would think, oh, if a house for $250,000, those are going to be selling like hotcakes in an environment like this. Well, not really. I mean, if you really, really think about it, I think it has to do with interest rate sensitivity. And if you are a high net worth individual or ultra high net worth individual, or let's say if you have a household family income of about $500,000, well, interest rates are probably not going to be as big of a factor as they are for people who are buying homes that are worth about $250,000 and they're putting about a 10% down payment on that house, right? So let's say if the house is a $250,000, you want to put 10% down and finance the rest. Well, think about what happened between this time last year and now. Well, rates are up about 100%. This time last year, you could get a 30-year fixed rate mortgage for about 3%. As of 2 months ago, the average 30-year fixed rate mortgage was around 6%. Now, granted, rates have come down a little bit here because that US 10-year Treasury yield has pulled back. But I think we're just seeing, ooh, that was almost a big accident. What I think we're seeing right now is change in consumer spending habits. And we're seeing the wealth gap from the pandemic exacerbate. So the people who have made a lot of money and who are doing great, they're doing better. And the people who are at the lower rung, don't have many investments, they're not doing too well. So we're seeing in the very luxury market and the middle class, higher end market, I'd say upper middle class, they're doing fine. But at sort of like the bottom level, it's almost like a total nosedive. It's totally fallen off a cliff. So good observation there. Coke bottles is net income of $500,000. We aren't football coaches. Yeah. Coke bottle. Yeah, Mets fans like mortgage rates and down payments are too extreme. I'd rather rent. Yeah, there's many instances where renting is actually a better choice than buying. But Jonas here, good to see you. Welcome. Mets fan, thank you. Willie says, my niece has folks in line. No inventory in rural Kentucky. Wow. Hey, John Sorley is here. Says, hey, Tom. Hey, John. Good to see you. Gregory's like, I got my drink ready. Funny. Eddie says, you would get used to the humidity if you stayed down here more. So, Eddie, I'm actually a big fan of the humidity. It's just that during the day, it's not the heat that I try to stay away. I just try to stay out of the sun. So, and it's only really during August, right? Any other time, like let's say if it's October till about March, I could do yard work all day outside. But in August, it's like the sun is blasting. It feels like 110 degrees out. I think it's just better to do a lot of the yard work late at night. Just because I don't really want to get blasted with the sun, get too much sunburn, but Steve says, Tom, do you use a chest rig to film? I don't. So we have like a gimbal, so it's sort of like a stabilizer that holds the camera a little bit steady. Hey, what's next says, hey Tom, I live in Texas. I know exactly what you're talking about. Yeah, so what part of Texas, if you don't mind me asking? Obviously you don't have to say that, but which part of Texas? Because a lot of New Yorkers have actually been moving to Texas. I had a couple buddies actually move down to Austin, Texas, not too long ago. Oh, Coke bottle says, I hate the heat. I need to move to Alaska. Yeah, I mean, it's definitely not for everybody. For me, I'm like the polar opposite. I love to be outside all year round. Steve says handheld gimbal. Yes, handheld gimbal, correct. Hey, line sync. Yeah, exhausting yourself in the heat is very foolish. Yeah, plus I had to do a ton of work today. So I went outside to pull some weeds in the backyard, and I'm like, I'm gonna be absolutely soaked when I get to the office. So I'm like, yeah, I'll definitely do that tonight. You know, even if I go home tonight, tomorrow's Saturday, so what I'm planning to do is firing up the charcoal grill. So obviously being in New York, you're not really, if you're in the city, you're not really allowed to use like charcoal grills. I mean, you can if you want, but it's very cumbersome. So I got myself a charcoal grill. It was the best $50 I've ever spent in my life. So I'm gonna stay up to probably 3 o'clock in the morning, do some yard work, grill some shrimp, maybe a couple steaks, call it a Friday night. I mean, what better Friday night could you possibly have in Miami than doing that? I don't know. Exploration, good to see you. Hey, Carlos says, what is your forecast to real estate in the United States? So I think that's a good question, and I think I'm going to answer it in a way that you may not like, but I think it's the right answer. The United States is massive, and I think it's very possible that we see an environment here where some real estate markets do not go down at all, but other real estate markets will have anywhere from a 10 to 15% correction. That's very possible. And so here's my thesis, and so far my thesis is actually playing out to be incorrect. It's actually playing out to be incorrect. I think the markets that have experienced the most growth in terms of year over year price gains in the US will start to cool at a faster rate as opposed to places like the Northeast. So one of those places is right here, Miami, Florida. I'm expecting a cool down in this market because there was a lot of wealthy New Yorkers, a lot of wealthy people from the Northeast and California going crazy and buying property down here during the pandemic. oftentimes for a lot more than it was worth. So I think if there was a place or a market that would have to cool down, I think it's probably going to be like Miami, Florida, Fort Lauderdale, Austin, Texas, Dallas, Texas, Phoenix, Arizona, Las Vegas, all of the markets that saw 10 years of price appreciation compacted into 24 months. I think you could potentially see negative real estate prices over the next 5 years, but over the long term, I think they'll see very, very healthy appreciation. That's what I think. Now, do I think you're going to see some sort of a 2008 style housing crisis? I don't. And the reason why I think that, and we've been talking about this for a long time on the stream, is because underwriting standards are very, very healthy. So this isn't 2008 where you could get a mortgage with no income verification, very, very low or no credit score. A lot of the mortgage lenders are very, very meticulous now. So underwriting standards have improved, that's number one. Inventory is still relatively low, that's number two. I think there's about 3.3 months of supply on the market right now. So I don't think you're going to see massive price declines. I think you'll see price declines maybe after inflation in select markets that had massive growth over the past 24 months due to the pandemic. But as of now, that prediction is not true. And we know that because if you looked at the existing home sales data, markets like Miami, Florida went up again. We actually just took out New York as the number one most unaffordable place to live in the United States. Austin, Texas, I think went up again, but Denver, I think, is starting to cool. But that's sort of my take. Hey, DJ EZ says it's amazing how after all this time, downtown Miami is still empty, and most skyscrapers are vacant. Never changed since I left. Interesting. I didn't really observe that. Gene, good to see you. 3TC says Tampa area has the highest growth last year. Yeah, Tampa, Florida. I also think Las Vegas is probably going to come down a lot. So maybe on Monday we'll do a stream where we check out the new Citadel Securities office where they're going to be breaking ground on their mega tall office building here. But for now, Citadel Securities has their satellite office actually in the WeWork that I work out of, 200 Southeast Financial Center. So Citadel is officially leaving Chicago, Illinois, and coming back, or I should say coming to Miami, Florida. So this is the Aston Martin building. I think somebody said it's supposed to be finished in 2 to 4 weeks. I don't know. It seems like they still have some glass to install on there. Hey, Fernando says hugs from Brazil. What's up, Fernando? But if you guys want to stay up to date on my thoughts on the financial markets, if you scan the QR code at the top left-hand corner of your screen, I do write a newsletter, usually every other week on a Tuesday, where I cover the US equity markets, emerging markets, fixed income, real estate, cryptocurrencies, all that good stuff. So it's a good free way to support the stream. So if you scan the QR code, you will be taken to the landing page of the Behind the Street newsletter. And all you have to do is just punch in your email, and I will send it to you 100% free. So I think to cap off the night, everybody, many investment banks, I think this was breaking news, many of the investment banks are going to be forced to pay, I think, about $1 billion in fines after traders misused platforms such as, I'm blanking on the name, Signals and WhatsApp. Now, I'm not sure what regulation this is. It's sort of going past my mind, but is it that Sarbanes-Ox? I'm not sure what it is. But essentially, if you're a trader at a bank, you're not allowed to discuss trades or client information over those private applications. And the reason for that is because the investment banks need to actually track and report all of that data to the regulators. And if you're doing that over your personal phone, it's almost near impossible for you to report that into the regulators such as the SEC. So over the past couple of years, there's been many, many instances where traders at JP Morgan, Morgan Stanley, UBS have been talking to clients on personal devices over WhatsApp and Signals. So I believe they settled on about a $1 billion fine. Now, there are companies such as Verizon, AT&T, and T-Mobile. So if you work as an account executive or enterprise account executive, probably enterprise account executive, at any of the major telecom companies, chances are you probably sell some sort of solution that addresses this problem. I believe the solution is called Multi-Line, and I think one of the companies that sells it is called Movius, but it would allow you to essentially have an encrypted application where you could have full tracking and tracing of the verbiage that the traders are communicating to their investors, in which case they could relay that to the regulators. So I think a lot of those salespeople that are selling into the investment banks could have a pretty good sales pitch on their hands now. Hey, Bagels and Walks, what's up? Hey, Amanda Ross says, do you think Miami would be a smart move for somebody getting into a tech career? I'm a graduating UX design student. Hey, Amber, that's awesome. That's fantastic. So I think so. One of the reasons why I moved down here, I work in enterprise tech sales. So I sell either, large software and hardware into the Fortune 500, Fortune 50. I'm trying to figure out what this guy's doing. I'm not sure if I could go. But I think you could have a pretty decent career down here. Now, for full transparency, I think there's probably more job opportunities still in a place like New York. My advice, I would not go to Silicon Valley. I think the best thing if you're just coming out of college, you don't want to get a job that's fully remote. And I know that may sound like that's not good advice, but I'm going to tell you why it is good advice. When you're very, very early on in your career, you want to be able to learn from people that are much older and more experienced than you are, and I think it's going to be very, very difficult for you to get that full experience, that immersive experience, fully remote. I think once you get about maybe 7 to 10 years of real hardcore working experience, working alongside a project manager or your direct manager, you're going to be ready to then make that transition to maybe fully remote position. So you could work on, maybe you want to own your own software company, maybe you want to own your own web development company. So you can work on those two in tandem. But if it were me and I was fresh out of college, I would not take a position that's 100% remote. I would be in the office all the time, because you need to build your network, and when you're a young kid, you don't have a network, you don't know anybody. You need to know people, you need to go in the office, you need to shake their hand, they need to know your name, they need to know what you look like, they need to know that you're going to show up to work every day and give it 110% and breathe fire, especially if you're a salesperson, especially if you're an investment banker. That's how you're going to rise to the top and make the thunder money. But again, that's a very controversial statement. Many people would say, nope, do it 100% remote. But I think if I had to do it again, like when I was early on in my sales career, I was in the office every day, staying in the office till 11 o'clock at night, getting to know the best sales guys and girls in the office and riding their coattails. What they did, I did. Everything that they did, if they made 200 calls a day, I made 210 calls a day. If they went on 20 appointments a day, I would go on 10 of my own and I would shadow them on about 5 of theirs, right? So, I don't know, that's what I would say. I think it's going to be a controversial statement because many people are like, no, the work-life balance. You could do the work-life balance when you're 50. When you're in your 20s, it's time to attack and get serious. But friends, I know. We have to end the stream because I have to get the earlier bus tonight, but I want to thank everybody for coming out. I think this was a really fun stream. I think Miami looked amazing tonight. I want to wish everybody a pleasant, relaxing weekend. If you're new here, leave a like on the video, subscribe to the channel if you are new. Check out our free investing newsletter. And I will see you guys tomorrow. But Joan, thank you so much. Gregory, I appreciate you. Sunshine After Rain. Dr. Longus, hey, Amanda Ross, thank you for joining. I appreciate it. Fred X, thank you so much. Andy from South Korea, good to see you, Andy. Victor Alfonso, thank you, Victor. DJC, good to see you. Thank you for joining. Austin City Limits, Best Bets TV, Mohammed, Carlos, Bob, all of our moderators, thank you so much. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. I'll see you guys right back here. Maybe we'll be in Sunny Isles Beach tomorrow night. I don't know. Anyway, click the link in the description. If you want to connect on Twitter, follow @WalksWallStreet. Sign up for the free newsletter. Like, subscribe, and most importantly, everybody, have a great, relaxing weekend. See you tomorrow.